Hello, this is Jordan, and this is the Precious Metals Video Market Update for Palisade Radio listeners. Today is Tuesday, October 14th, 2014. Here is a daily bar chart of the HUI Gold Bugs Index, which looks at the large, unhedged gold miners. Now, we can see that the HUI rebounded from support there around 190, and it has resistance at 203, 211, and let's also keep an eye on the 50-day moving average at 221, which continues to decline. Now, because the HUI was extremely oversold, it's likely that, assuming we're still in a downtrend, it's likely that this rebound or rally attempt could continue. Markets can correct in price or in time or in a combination of the two. So, in other words, if this rebound doesn't go much higher, that doesn't mean that it can't last for a couple more weeks. So this is a market that in the bigger picture still looks very bearish to me. I'm still expecting a break below that major support at 190, but clearly in the very short term here, looking out over the next week or two, this is a market that could rally because it still needs to work off this extreme oversold condition before it can be in a position to break to new lows. Now this is a weekly candle chart. We have gold at the top, we have silver at the bottom. Now let me start with silver because that's a little bit more simple. We can see that silver broke below that very important support below 19. Silver was down 11 out of 12 weeks. Like the miners, it was extremely oversold, and that's why it's rallying. Silver could continue to rally back up to maybe the mid-18s or a little bit higher. It could rally up to that former support just below 19. But in my opinion, in the larger picture, silver remains in a downtrend, and I don't expect it to end until it breaks to a new low. Now looking at gold, gold broke to a new low below 1200 a few weeks ago on a weekly closing basis, yet it has bounced with the rest of the sector. This is still a very bearish looking chart. There's some comments out there that this is a possible triple bottom. Triple bottoms in technical analysis really do not exist unless you're looking at a triple bottom over multiple years. When you're looking at a year in that sort of time frame, there's really no such thing as a triple bottom. You can have a head and shoulders pattern, but we don't see that here. I mean, let's look at the alleged three bottoms and let's look at the tops. In a head and shoulders bottom, each rally usually gets back up to the same resistance point. In other words, you don't see lower highs like we see in this chart where you have the high in August 2013, then the next time, March of 2014, was lower. Now look what happened with the recent high this summer. Gold wasn't even able to rally up to that resistance trend line. So again, this is a market that in the larger picture is very weak, and a few weeks ago it happened to become extremely oversold, and I believe we're working off that oversold condition. Now you can see the red line there just below 1270. There is resistance at 1250, but it is possible gold could rise a little bit further beyond that before we see more selling come back. That's all for today. Thank you so much for listening, and please consider visiting my website at thedailygold.com. You can sign up for my free newsletter there. Just put your email address in the box at the top right corner. If you have any comments, feel free to email me, Jordan at thedailygold.com. Thank you, and have a great rest of the week.